A very good morning to everybody. Good morning, good morning, good morning, good morning. I hope you're doing well today. This is the opening bell, ladies and gentlemen. It's an absolute pleasure. Before we get started, please remember the information that we discuss in the video. It should not be construed as advice in any way. We are giving and putting this forward as education and make sure that the guys are well equipped. So let's get started with today's session, guys. We're looking at a couple of currencies here. We had a fantastic update from Macaudi yesterday on some crypto. We are dealing with some currencies this morning, a bit of commodities as well. We have some news on the Australian dollar. We got something on the Kiwi. We got something on gold. We got something on the yen. There's some US dollar news here as well. Let's perhaps maybe start with the AUD. We are seeing a bit of a slip on the Australian dollar, guys. It's really after 2 days of a good movement to the upside. We are seeing a bit of a correction possibly come down now. This is the past 2 days, day one, day two, and this is day three. If we do break beneath this area, guys, we could have some good movement here. All right, now this drop came even after Australia and the US signed a major critical minerals deal aimed at reducing US dependence on China. The $8.5 billion plan will help expand Australia's mining and processing capacity. So even though that was in place, we still saw a weaker Aussie here this morning. All right, and this being one of the daily, I would say, ones that have not gained as much. One can also look at the relationship that China has with Australia. There's really something that's maybe not spoken of there, and that's why we're not seeing people react really to this. But also, we can see that we are below a 7-day performance here, guys. The past week, we're seeing the Australian dollar has traded below that. So we're seeing some more downside here. If the dollar continues to strengthen, we're going to wait and look for it. I mean, at the end of the day, you can only look at what the stats are giving you and then, wait for the data to push ahead and sort itself out. So at this point in time, we're waiting for a weaker Aussie to continue here for an intraday move, guys. We're not looking at any daily frames here or weekly frames. We're looking at intraday structures, and that's it. But we need a break and close beneath here. It's rejecting at this point. We did travel down there, but it is rejecting at this point in time. All right, next up, guys, we have the USD JPY. Now, this morning, we have two options here, actually. We have a very high risk area and we have a low risk area. Now, with the USD JPY, let's start with the yen here, all right? The yen weakened towards the 151 area this morning, all right? Falling for the third day. Now, markets are waiting Japan's parliamentary vote confirming Sanai Takachi as Prime Minister. She favors more government spending and could resist further Bank of Japan rate hikes. This means weaker yen. Now, a board of Bank of Japan board member hinted rate hikes may be coming, offering slight yen support. So do you see the dramatic mixture between one of the politicians versus a board member there stating two different things? That's why we're seeing this kind of movement we have here. Hence, trade one is high risk. However, if price does break above and the dollar continues to strengthen here, which could be the case because the dollar index rose to 98.7 points, a 1-week high, and investors are assessing how the shutdown, trade talks, and rate outlook may impact the economy. So these fundamentals that we are seeing and looking at is giving us a mixture here right now. Hence, trade two is really more low risk because we are actually pushing up and creating another higher high, which shows us that there is some more structure to the upside, roughly to about 152.600. Now, guys, these are just areas, all right, of previous structure development. That does not mean that any trader needs to take their profits at that specific place. This is a guideline, an educational guideline to everybody. And so that's very, very important, all right? I'm seeing Prince, they're greetings, I'm late, but I like One is smashed. Thank you very much. There's Prince there. Thanks, Prince. Jules, I see you. Angelique, I see you this morning as well. Very good morning to the guys. Yeah. So the USD JPY, we're seeing some more upside here, guys. There was a break of structure there. So it's looking good for that long. High risk right now. Trade one. There's a correction taking place. Obviously, guys, we need to assess danger zones. If price breaks and closes beneath this support here, around 150, then obviously price has a higher probable chance to go back to that area. So right now it's looking very bullish for the intraday move. One high, two high here. And if you count back 7 days, 1, 2, 3, 4, 5, 6, 7, we're anticipating price to go back to that 7-day performance high right there. All right. So let's have a look at this one. Also looking good. Trade 2 seems much better than trade 1, but obviously some of the guys we know has already pushed in here, but we're going to wait and see how trade 2 looks. And then here's the NZD USD, the NZD, the keyword I spoke about. Now we saw the NZD drop to about 0.57. That's the current reality, as markets expect the Reserve Bank of New Zealand to cut rates in November. Inflation rose to about 3%, but the core pressures remain low, suggesting the economy is cooling down a little bit. All right. So there's two types of fundamentals there in different spheres. One is a specific report on the inflation. And the other one is also one could say some feedback on some expectation of a rate cut. And so we try to juggle both of them. And looking at the technicals here, some support came from improving US-China trade sentiment with new talks scheduled for the week. But if you look at the technicals here, we are looking at some more drops to come on the NZD. This is a high risk zone, guys, because the price is rejected in this area before. So there's a chance that price could reject again. However, we do know that winning is in the risk-taking equation. And so hence we are saying that trade 1 might be high risk, but at the end of the day, you do learn through taking risk as well. The great thing about taking risk is, especially with TD guys, you guys can, obviously put in low risk volumes, all right, in the specific place here, because there's different ways to, I beg your pardon on the expression, skin a cat. And so trade 2 is much lower risk because we've now dropped it. If we close beneath all of the support candles here, a much cleaner traffic down to the exit at around 0.56. That's that nearest low there. I want to reiterate and mention again, we are not trading the daily frame. All right, the daily frame has a much lower area here, 0.55. Now, what's important to understand is that this is an extraction on a 1 hour time frame. That's what we're trying to do here. All right, join our classes to understand how we do that. Now, both the 1 hour and the daily is bearish. So we are trading a parallel reality here of two different time frames, of two different periods, one high, one lower, but they both going in the same direction. So it's just a matter of time before they meet each other, all right, so to speak, below 0.57. We have to be patient as traders to wait for that movement and the close beneath at the end of the day. And that's one of the things that the guys do struggle with, unfortunately. So we are doing the NZD USD today, stronger dollar. We're looking at the USD JPY. We're looking at a stronger dollar. We're looking at AUD USD, stronger dollar over here as well. But we need the closes and the breaks beneath. And then lastly, maybe just to give you the AUD JPY, this one's a little bit insensitive to us, if I can say that. The reason why is because on the one side, we're seeing that there's a lot of movement to the upside. And on the other, we're seeing a bit of a mixture in terms of the fight. Now, if you look at the 7-day performance on this one, if we go back, all right, there's 2, there's 4, 5, 6, 7. This is the 7-day performance. So what we essentially need here, all right, peeps, is that we need price to actually push, above this area here. That would be the low risk. That would be a much better place to get in. This area over here, trade 1, is high risk. Why? It's just outside of the triangle that you can see here. In fact, I can actually just adjust it. So this would be outside of the triangle. And that's high risk because price is still in a rejected state. Now, Ash, why would you say that? Because you can clearly see it right here. That is price rejected. This is price rejected. That has price rejection all over it. And so what we would need is for price to break above those structures. Once we above, much higher probability that this becomes our reality. All right, this is intraday movement. This is not us trading the daily frame. You'll be having much longer outcome-based TPs and stop losses if you're trading the daily frame, because we would then take it up to this area here, which is 108. So if we're trading intraday, we're only looking at scaling it up to that area and then later on looking at that high to be broken for us to push up there. So this is really thought out. It's not us just coming in and just giving all sorts of levels and so forth. It's actually understanding what's happening, mixing together the fundamentals and the technicals and giving a nice understanding of how the guys can approach it. Well aware that many guys approach the markets in different ways. All right, guys. So we're not oblivious or ignorant to that fact. We are trying to simplify things for our clients, for our students at the end of the day, so that they can see the markets in a simplified manner so they can make a more informed decision at the end of the day. And that is critical. So if you'd like to obviously be part of what I've just mentioned there, you can open up an account for those of you that have not joined with TD yet. www.tdmarkets.com. You can also email us at care@tdmarkets.com. And for all the guys that are already part of the TD family, just reach out to your account manager. That's it. Reach out to your account manager. They can get you started in the classes. We have Mondays to Fridays. That is 10 a.m. That's the beginner sessions. We have the 3:30 afternoon session, and we have an evening session as well at 6 o'clock. So we jam-packed, and we are absolutely waiting for you guys to pull through. We've got lots of guys that are watching near and far and wide, and we are and for us, it's an absolute pleasure. All right. But that's it with the opening bell here this morning, ladies and gentlemen. Traders, all the best today with the markets. Don't forget, join Macaudi at 2 o'clock for our trading room. There'll be some opportunities there. I know he's going to go through a couple of major minor pairs. I know he's going to mix in some commodities. There's crypto as well. So please join my brother Macaudi in the trading room live at 2 o'clock via YouTube. All right. See you guys there. Be there or be square. Ciao, ciao.